Yo, welcome back to another episode of the Money Matters podcast. I am your host, Jack. This is Mailbag Monday. What the hell is Mailbag Monday, you might ask? It is every Monday, 6 p.m. Eastern, 5 p.m. Central, 3 p.m. if you live out west, where I get on the internet and I scream in this empty closet about what's on my mind. What's on my mind is almost always Bitcoin. So it is good to see all of the usernames in the chat. Hello, hello. Always much love to you guys. And the numbers are going up. A lot of people listen to this podcast nowadays. I'm super grateful for that. I know you guys are appreciating it, and I appreciate that. Okay, for time stamping purposes, I'm dialing in. It is March 31st at 5:06 p.m. Central Time here in Chicago in my empty closet. The Bitcoin price is $82,420. That gives it a market cap of $1.64 trillion. The Bitcoin all-time high is still $109,300. So we're down almost 25% from that all-time high. It's been 70 days since that all-time high. I find that stat, it's kind of telling. It's been quite a little while since we've been above 100K. Okay, my topic, my rant that I'm going to go on today is about continued volatility in Bitcoin and tariffs. Bitcoin's down, trading at about $82,000. I believe last episode we were at $86,000, $87,000. So it's down maybe 2, 3, 4, 5% since I last saw you guys. The volatility is expected, and the volatility is because this is a very, very big week. Tariffs tomorrow. April 2nd, Wednesday. Tariffs, as we've talked about a lot, the market seems to care. The market does not like uncertainty at all. No bueno. And what we got last night on a Sunday, conveniently and likely not on accident, is a few telling Trump headlines. One, Trump said he's not opposed to running for a third term. Also, by the way, guys, let me just be straight with you real quick. I'm not a political guy. This is not a political podcast. I don't care as much about politics as a lot of my listeners seem to care. Don't take these as political opinions. I didn't look into the validity of these headlines. These were just literal headlines in the news. Whether they're true or not, I don't know. I'm not a reporter. I'm not a journalist. I'm a Bitcoiner. The headline was, Trump considering running for a third term, says it's possible. So that was the first headline on a Sunday night, by the way. Again, no accidents like this. Sunday night. Then he followed up, and the next headline was, I have it right here, Trump weighs broader, higher tariffs. Okay. What have we talked about over and over and over and over again on this podcast is markets do not like uncertainty. They do not like uncertainty. Bitcoin, I think Bitcoin is mistaken as a risk-on asset. I think the reality is Bitcoin, the utility Bitcoin serves to the world today is a global macro smoke alarm for global liquidity and risk. And so if on a Sunday night, the president of the United States is going to say, I might run for a third term, and then say, I'm thinking about stronger, harder, broader, all of these overpowering bully words for tariffs, Bitcoin's going to sell off. It's the only 24/7 global free market in the world where you can express a concern about macroeconomic, geopolitical relationships, about global liquidity. On a Sunday night, where else would you have been able to express a concern about what the president of the United States said? Think about that for a second. Global, free, accessible market that is the macro smoke alarm for global liquidity today. Bitcoin led the S&P 500 down. Bitcoin moves first. It's free. It's global. It's accessible. So why is Bitcoin down? Because of macro, because of Trump, because of tariffs. I expect a lot more volatility. We've said it over and over and over and over on this show. Volatility in the near term, bullish in the medium to longer term. We're still right in the thick of the volatility. Markets do not like uncertainty. They're going to freak out. They're going to sell off. And also, by the way, if you look at gold and how gold's trading, I mean, something is up. Something is up. Markets are calling bullshit. Markets are scared. Supposedly, we're getting clarity on tariffs and the policy on April 2nd, and markets are trying to price that in. Are they pricing in too much downside? Are tariffs going to be light? Is Bitcoin going to pop? Maybe. Is Trump going to be aggressive? Is he not only negotiating, but he's going to act this time? Maybe. Nobody knows. So I expect a lot of volatility. It's tariff week. Bitcoin is a global macro smoke alarm. Think about it. People say Bitcoin has no utility. What other monetary network can anyone in the world express concerns about what the president of the United States said on a Sunday night? The answer is zero. There's no such other useful asset, useful monetary network that provides you that level of utility. Extraordinarily useful. That's why it leads itself on the way down. It leads the world on the way up. Now, what I wanted to bring to your attention. So listen, my opener there, Bitcoin's volatile. It's volatile for obvious reasons, because the world is volatile, because Trump and this administration have been volatile. Policies are unclear. They've been in office for 8-9 weeks now. They're rushing policy. They're trying to front load a lot of the pain. They're purposefully engineering uncertainty. They're purposefully engineering intimidation tactics. All of this is expected. Bitcoin's going to be volatile. Bitcoin's going to trade down if the world is scared. Just a fact. Okay. What I wanted to bring to your guys' attention is what the Fed has been issuing. Because I really want to continue to build conviction in my medium to long-term thesis that Bitcoin's going to hundreds of thousands of dollars per coin this year. Okay. Just to remind everyone, or for those new listening to the show, my opinion, you take it for what it is. You could disagree. You could hate it. I don't give a fuck. You could agree with it. You could use it. I don't give a fuck. It's just my opinion. My opinion is that easy monetary policy is around the corner. I think the aggression and the front loading of pain is because there is a lot of money to refinance over the next 12 months. The U.S. government has to roll over $10 trillion. April's their biggest month, when Treasury Bessent's saying the 10 years got to come down. 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 You guys want to know why the 10-year has to come down? The 10 years got to come down because they're in so much debt. And so they're pushing. Can we get rates down? Can we get the 10-year down? Can we get rates down? Can we get the 10-year down? Think about it logically, guys. If you had to refinance $10 trillion, you'd probably want as low a rate as you could possibly get. You want easy borrowing conditions. You want easy monetary conditions. I want to show you guys a Bloomberg headline titled, "The Fed is urged to mull a hedge fund bailout facility for basis trades." Okay. As we talked about last week, the Federal Reserve came out and said they were slowing down QT, quantitative tightening. And they're starting to flirt with this roadmap of slowing down quantitative tightening to stopping it, and then picking up quantitative easing. Now, they haven't said that explicitly, but what the Fed is masterful at always is doing QE, not QE. Not technically quantitative easing, but actually quantitative easing. And so after that Fed meeting with Jerome Powell, where he said, we're going to stop QT, all eyes were on, was he going to flash any signs for QE, not QE? Was he going to start putting things out in the media and flirting with the idea of getting more liquidity out there? Okay. Stock market's getting crushed. Assets are getting crushed like Bitcoin. These guys are desperately trying to get the 10-year down so that they can issue at the long end, they can refinance all this money, and then juice this thing to the moon. Okay? It's been my prediction. It's playing out. Still my prediction. Now, this headline, let me download it and share my screen with you guys. So I'll read it for those listening on the podcast waves. But for those watching on YouTube, I want you guys to be able to see this Bloomberg screenshot here. Hold on. Best podcast producer you've ever met. Me. Just bear with me for a second. All right. Share. This is what I want to share. Can you guys see my screen here? Let me zoom in and we'll scroll through it together. Fed urged to mull a hedge fund bailout facility for basis trades. Summary by Bloomberg AI. A panel of financial experts suggests the Federal Reserve should set up an emergency program to close out highly leveraged hedge fund trades in the event of a crisis in the $29 trillion U.S. Treasuries market. The program would involve hedge bond purchases, which would allow the Fed to intervene in the market without removing, quote, duration, end quote, from the Treasuries market and blurring the line between financial stability operations and monetary policy. The proposed basis purchase facility would involve auctions of bundled basis packages, allowing the Fed to set a minimum bid price and limiting moral hazard, and would be a more elegant solution than outright purchases of treasuries. Okay. The reason I want to share this with you guys is what followed Jerome's last meeting of saying he's going to slow down quantitative tightening was immediately issuing out these press releases and putting out feelers of QE, not QE. Everybody knows who has been the buyer of treasuries recently. Have been these basis trade hedge funds. When you ask yourself, who the hell is buying treasuries right now if it's not China? Tether and these hedge funds. That's the truth. And putting out a feeler of like, we really need these hedge funds to keep buying. What if they blow up? Could we bail them out? Is everyone cool with that? By the way, the Fed's never going to put their name on this. The Fed is suggested by really smart, established economists. The Fed's never going to say, this is our idea. What's going to happen is established economists and market participants are going to urge the Fed to consider something. And this is what they do. They're putting out feelers. Guys, what have we said? The market doesn't like uncertainty. And so the Fed's never going to surprise the market, ever, 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 ever. Doesn't want to catch anyone offside. The whole point is to build trust in the market. They want to be reliable. They want you to trust them. And so they're going to put out these feelers. They're going to telegraph exactly where they're going. And I just wanted to share this. It is very obvious to me that the Fed has gone from, Jerome Powell's gone from, I'm fighting inflation, I have a job to do, Trump, get the fuck out of here, I don't care about what you have to say or what you care about, I'm here to do my job, which is an independent bank. Boy, has that changed, hasn't it? That changed quick, didn't it? To, let's slow down QT. Wait, someone just urged us to mull hedge fund bailout facility for the $30 trillion treasuries market. Is everyone cool with that? We going to get any backlash? Anyone want to give me a phone call and let me know why that would be a really bad idea? Because if not, so I continue to believe, I mean, another one was Besant saying that right now banks are restricted in how much they can purchase in the treasuries market, which is true. Let me see if I can find this one. Hold on. And for those listening, I apologize for the delay. I should have pulled this up. Restricted. because it's another phenomenal example of what's about to happen. So the story here is, after the 2008 financial crisis, there was regulation introduced, which in my opinion was fairly logical, which is, as a bank, you cannot use unlimited leverage to ape into positions. You have to post some collateral, some leverage, some collateral to get leverage in order to buy things like treasuries. And that's reasonable, right? Like, banks shouldn't have unlimited buying power for something like treasuries. However, the problem with that is, when there is no unlimited buying of treasuries, there's no unlimited amount of demand for US debt. And so Secretary Bessent has made comments saying banks have limitations on how many treasuries they can buy. We're looking into getting rid of that, basically untethering them again from needing to post any sense of collateral and having unlimited leverage and being an unbounded buyer of US debt. And so I just want everyone right now, there's tariffs, Trump's third term, blah, 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 and everything's volatile. I say all the time, markets either scare you out or wear you out. They're either going to scare you out, they're going to take the seat right from under you. It's going to make your stomach drop and turn. You're going to wake up, your portfolio's down 10%. You're going to want to cry. That's scaring you out. Wearing you out is, man, it's taken months, week after week after week. This market's not moving. I thought we were going to the moon. I'm exhausted hearing about tariffs and Trump and strategic Bitcoin stockpiles and sale. Or, man, is this thing ever going to move? Scare you out or wear you out? Scare you out or wear you out? The bigger picture is starting to unfold before your very eyes. Fed urged to mull a hedge fund bailout facility for basis trades. The Secretary of the U.S. Treasury is saying we need to uncap the amount of leverage that banks are willing to take on to buy treasuries. Really, really, really big deal. I continue to say, I think all-time highs within the next few months, within Q2, within this quarter. And I think hundreds of thousands of dollars before the year's over. Obviously, there could be black swan event, recession. I really do not think that this administration can afford that. I don't think that these deficits can afford that. There's only one way out. It's through currency debasement. Elon, the amount of fraud Elon is rifling out and the amount of spend he's cutting is really calling the hand of Bessent and Powell. They need to act quickly if they're going to land this plane safely. And you're just starting to see. And when I saw this press release, I grinned from ear to ear. I mean, the dollar is going down so far. They're urged to mull a hedge fund bailout facility for basis trades. I mean, just the first $29 trillion U.S. Treasuries market. That's the only number in this press release. $29 trillion U.S. Treasuries market. So anyway, in my opinion, this is a pretty flat week. This is definitely the scare you out, wear you out time. You got to hold your convictions. You got to stay humble. You got to stack sats. My message this week is pretty short, but pretty simple. It's that I'm starting to see the signs from financial authorities that easy monetary policy is coming and that they're going to print the shit out of the dollar and they're going to debase this thing to the ground. All of what we've already known is coming. I mean, I can only say it so many times on this podcast, but I was very upfront with you guys. It could go down. It's going to be very volatile. It's going to scare you out. It's going to wear you out. It's going to be really tough. Only the strong survive. But when I start seeing signs, I'll tell you exactly when I see the signs. This was the biggest, most violent sign. And then the Fed's not going to put their name on it. The Fed is urged. Who urged the Fed, might I ask? It doesn't mention. Some credible economist. Strong suggestion to the Federal Reserve. So that's what I think about the market. Everyone keep your eyes out on April 2nd. It's going to continue to be volatile. Also, by the way, tax day coming up. People sell shit to pay their taxes. April's never been like the best month of all time for Bitcoin. So I expect it to be volatile. I have no idea what's going to happen with tariffs. Nobody does. That's why markets are behaving the way they are. But you can see between Bessent and Powell, you can see the path to easy monetary policy, which is the path to dollar debasement, which is the path to the hardest money is going to perform the best. There is no second best. Money printer is clearly going to go burr. The Fed is putting out cover already. And boy, did that turn around just like that. That's why you don't ever believe anything these fucking guys have to say. I mean, remember when inflation was transitory? He said it again, by the way. Tariff inflation is transitory. That's code word for I don't have to give a shit about it. Okay. Let me pull up some Q&A. This will be a shorter episode. We also have some strike lending news or some milestones that I can share with you guys. Let's see what questions you got. But yeah, I mean, everything else in the industry, I didn't have any major topics that I thought was worth covering, if I'm being totally frank with you guys. Okay. Are we ready for some questions? Just pulling everything up. Okay. Macro. With the Bank Term Funding Program, BTFP, and the Reverse Repo Facility, RRP, draining and slowing quantitative tightening, QT, are we already in stealth QE 5.0? If so, how do you see this impacting Bitcoin's price over the next 12 to 24 months? I think Bitcoin's going to $250,000 per coin this year. That's been my prediction for quite some time. It could go way higher. I think that that's the minimum. I think monetary policy is going to ease tremendously. I think it's going to happen fast. I think it's already happening based on what I'm showing you guys and screen sharing. These are the type of feelers financial authorities tell you verbatim what they're going to do. They like to telegraph it. They like to be transparent. They don't like to catch markets offside. Markets do not like uncertainty, and they do not like shaky markets. So I think it's going to be tremendously good for Bitcoin. Listen, guys, Bitcoin's the only asset in the world that you can't make any more of. So any new demand, you have to buy it and get it from the market, not from the ground. You can't get more Bitcoin from a factory. You can't get more Bitcoin from underground. You have to get Bitcoin from people who have it, people like me. And so it goes immediately into price discovery. So that's been my opinion. It's going to remain my opinion. Are we in stealth QE 5.0? Maybe. But not, I mean, whatever version of QE, if we are in right now, I think we're all in for a treat. I would say starting in the next few months through the rest of this year and probably well into 2026 as well. Probably in the midterms. Can you explain why ES futures, the E-mini S&P 500, wouldn't do this as effectively as Bitcoin? Wouldn't do what as effectively as Bitcoin? Do we know what that was in reference to, Lavinia? Can you explain why ES futures wouldn't do this as effectively as Bitcoin? I'll just take a guess at what you're asking. I don't actually know the context of the question. Why is the S&P 500 not as effective as Bitcoin? The S&P 500 is equity. It's not a scarce asset. Bitcoin is the scarcest asset in the history of our species, which is very simple but profound point. I often compare the promise and guarantee of Bitcoin, I mean, this is a dramatic point that I've made very often, but I equate it to the promise and guarantee of death. You know, the only reason that any of us value our lives is because we know we aren't going to live forever. It's because we know we're going to die, right? If someone tapped me on the shoulder and said, "Good news, man, you're never going to die," I'd go to the gym in 1,000,000 years. I'd start eating healthy in 10 million years. I'd think about having kids in 100 million years. Why would I ever value the sunset tomorrow? Why would I ever value the life I have tomorrow? The reason I get up for the sunset, the reason I take care of my body, the reason I'm prioritizing relationship and I want to be a father soon, that's because I know my time isn't forever, right? It is a finite promise that I'm going to die. And it's that finite promise that no matter what I do, I can't escape. That's what gives my life value. Okay. It's the promise of death is what makes life valuable. Now, for Bitcoin, it's the same thing. With more demand comes more supply in everything in your life, right? You want more McDonald's cheeseburgers, you want more iPhones, you want to find more gold, you want more Facebook stock, you want more US dollars, you want more hoodies, you want more shirts, you want more LeBron James shoes, anything you want. With more demand, if there's enough demand, more supply. Elon Musk said, you know, I can go find more gold on Mars if you really want me to, right? More demand, more supply, except Bitcoin. Bitcoin's the only thing in the world, think about this, in the world where more demand cannot create more supply. It's the same thing as that finite promise of death. You can't escape it. I've often said the world can change Bitcoin, or Bitcoin can change the world, because the world cannot change Bitcoin, right? Humans cannot avoid death, no matter how hard they try. And it's for that very reason that all of us find value in our lives. In the same vein, humans cannot make any more Bitcoins. Impossible. And it's for that very reason that it'll be the best performing asset ever, always. Never going to be close. Never going to be close. You want more gold? We'll find more in the ground. We'll find more on Mars. You want more Facebook stock? You want more Apple shares? You want more jewelry? You want more diamonds? More demand, more supply. It's the only provably scarce thing. By the way, that provably scarce thing is extremely important. You know, people will troll on the internet and say, my art is scarce, is just as scarce as Bitcoin, because I've drawn 2 things when I was in kindergarten, and I'm never going to draw again. And that's provably scarce. No, Bitcoin is provably scarce in a distributed global network. Anyone in the world can mathematically prove that it is scarce. You can't do that for your art or your boogers or whatever trolling bullshit people say on the internet. Provably scarce. Can everyone in the world provably show that gold is scarce? No. So that's why it's better than the S&P 500. As BRICS moves away from the dollar and trust in fiat weakens, do you think Bitcoin could become the neutral payment system for a world that's losing confidence in U.S. treasuries? Yes, I do. I've talked often about this. I think that the world is de-dollarizing naturally. I mean, listen, when you issue the world reserve currency, you naturally are signing up for a relationship with the world in which you trade with, where you are exporting said currency and you are importing both real goods and services and debt, right? So naturally, what you're signing up for is you import real stuff. You import food, oil, energy, gas, metals. You're importing real stuff that we all use to live. You're exporting pieces of paper that you're printing out of thin air. Eventually, The people that are giving you real stuff in exchange for pieces of paper are going to be like, fuck this. I don't want this deal. This deal sucks. Why am I giving away food, land, energy, metals, oil for pieces of paper that these old white guys are printing out of thin air? I don't want this. Deal sucks. And so the BRICS nations are de-dollarizing. They're like, why the hell would we keep doing this? This is a dumb, bad deal for us. And I think the natural state for humans is to have a neutral reserve asset, an asset that nobody can print more of, that nobody controls, and that credibly and transparently and provably is scarce and honest. That's what gold was for a certain amount of time. Not anymore, but it was. And so I think we absolutely are moving back towards a neutral reserve asset, 100%. And it's not sustainable for the US either. I mean, I've said this on this podcast so many times as well. I mean, look at what Trump is campaigning on. Reshoring production of stuff here in America. Because how reliable is it going to be that everyone else is going to produce stuff for us and we're going to be able to afford to buy it from them? I mean, it's a national security threat. Like, let's just be honest here. Let me just say the quiet part out loud. It is a national security threat that when I look around, let's see. This thing, my phone, China. This laptop, China. My keyboard, China. This mic, China. My entire life was manufactured and produced in China. Newsflash. They don't like the deal they're getting with us. They're not buying our debt anymore. They're selling treasuries. They're de-dollarizing. That is a national security threat. The gig is up. People don't like this scam. They want a better deal. So what is Trump campaigning on? He's saying, well, shit. We got to make America great again is produce our own stuff. So do I think there's a world where Bitcoin can be the neutral reserve asset? Yeah, hell yeah, I do. I think it's very likely, actually. Yes. I don't think any nation, by the way, people say China wants to be the world reserve currency. No, they don't. Nobody wants that because you have to operate in a deficit. You have to import debt. You have to export a printed pieces of paper for real goods and services. You're getting a raw deal in the long term. In the long term. Now, lucky for us as Americans, we can kind of bail ourselves out because we're very naturally rich. We've got a lot of food. We've got a lot of oil here. We can produce energy locally. We can actually self-sustain. But that's the whole point of what you're seeing from the government and a lot of these debates from a high level is we have to reshore production. We have to invest in local manufacturing. So let's tariff everybody else. Let's give tax benefits, any form of benefits to shore production and invest in local manufacturing here. Let's try and build ourselves in a self-sustaining way. And then, the future of the dollar as a reserve currency, I'm not speculating that that's going to end anytime soon, but where people store their wealth, their time, their energy, it used to be in treasuries. It's not anymore. That's unwinding. The whole 60-40 portfolio, in my opinion, is dead. Why do we trust the Secretary of Treasury and not the Federal Reserve? Are they not the same system? They are the same system. Now, technically they're not, and they're not supposed to be, but they are for a term that's called fiscal dominance. When you're in so much debt, it doesn't really. So first of all, the Federal Reserve is supposed to be an independent bank, independent private bank, by the way. And it's supposed to act on its own accord with its own mandates. And it's supposed to do that because it's not supposed to be political. Now, is that true? And is that the reality we live in? No, of course not. The reality is the U.S. is in so much debt that it doesn't really matter what the Federal Reserve, some independent private bank, wants to do. It doesn't matter at all. The reality of the situation is the U.S. is in $37 trillion worth of debt. And if the Fed doesn't support the U.S.'s ability to stay solvent, then everyone loses. Pax Americana goes poof, bye-bye. And so again, Jerome Powell can talk a big game like he was as Trump was leading up to getting elected, then got elected. Jerome Powell said, fuck Trump. I don't care about Trump. I don't like Trump. I have my mandate. I'm fighting inflation. Leave me alone. You can't influence me. Fast forward to the last meeting, and he said, I'm slowing down, pausing QT. Why? Why not raise rates some more? You haven't hit your inflation target. What was all that talk about, tough guy? All of a sudden, he's slowing down QT, and then you open a Bloomberg terminal, and he's being urged by someone that we're never going to find out who's urging this guy to put together a bunch of bailouts for these hedge funds that are buying all these treasuries. So the reality is it's fiscal dominance. The Treasury and the Fed are on the same team. How can we keep the U.S. solvent with all this debt? Can you explain the math behind how Bitcoin can increase in orders of magnitude over the inflow of dollars? Market cap up 1 trillion, but only needs $400 billion of inflow. Why is it not 1-to-1? Yes, I can explain that. A Bitcoin is worth whatever someone is willing to sell it for. Let me explain. Let's say I create Jack token, and I have 1 billion Jack tokens that I issue. And then I sell 1 Jack token to a buddy for $1. I've just engineered a market cap of $1 billion because there's 1 billion Jack tokens, and the last one was traded for $1. And so if you take the last traded unit and multiply it by the outstanding units, you get 1 billion. And so let's say Bitcoin's at 82,000. And let's say the next available purchased Bitcoin, because the demand is so high and the supply is so scarce, is purchased at $164,000 per Bitcoin. That would double the market cap, because now 1 Bitcoin is worth $164,000 as the last liquid available traded. And the outstanding supply of the asset class, hasn't changed. So the point being, the amount of demand coming into the asset isn't 1-to-1 with driving up the market cap. The market cap is calculated by taking the price of the asset times the supply. And so really those that are determining the price of Bitcoin are both the buyers, but also the sellers, right? Not just the buyers, the sellers. If no one is willing to sell someone a Bitcoin at 82,000, then the price goes to 83,000. And if no one's willing to sell at 83,000, the price goes to 84,000, right? Does that make sense? So there's not a natural seller at every single penny. With such a scarce asset, you can move trillions of dollars in market cap with only billions of dollars of capital. Do you think the U.S. government will announce that they are going to subsidize new Bitcoin mining build out to meet energy goals? Is this a better or more expedient way to accumulate Bitcoin than buying? I would say it's not. I would say I don't know if it's better or more expedient. I mean, listen, the funniest thing to me is when Bitcoin miners are out issuing debt and raising $1 billion, $2 billion, and then using the proceeds to buy Bitcoin rather than mine it. It's like a self-admission that their business doesn't make any sense, right? Right? It's like, aren't you guys the commodity producers? Aren't you the ones that can produce the asset for cheaper than I can buy it? You're going out and raising money and acquiring Bitcoin at the price I'm acquiring at on strike? I thought you guys were good at producing Bitcoins for cheaper than we can all buy them. And that's your business. If you invest a lot of money up front, where Bitcoins are trading at 82,000, you can make a Bitcoin for 70,000. So mining to me doesn't seem like a very efficient or expedient way to do anything when the best miners in the world are basically saying our business kind of sucks. Like if you were to give me $1 billion, I would go buy Bitcoin instead of mine it. It's like, really? Aren't you a miner? The fuck? So I would say I'm not necessarily bullish on the mining biz, but would the US government do it? Sure. I mean, listen, if you have excess energy, you should mine Bitcoin. Is it a way to accumulate Bitcoin? Is it a way to subsidize things? Of course, absolutely. If I were Trump, would I mine Bitcoin? Yeah, 100%. But is it cheaper, better, faster than just outright purchasing Bitcoin? No. Probably the fastest, best thing to do is to revalue the gold on their balance sheet, then sell some, buy Bitcoin. That would take a day. That would cost nobody anything. It would be budget neutral. It's my 2 cents. If 80% of Bitcoin isn't changing hands, why the bearish price action with all the institutional interest? I mean, price questions are always interesting. Like, there's no simpler answer than more people are selling than buying. And I know that's not technical. There's a buyer for every seller, a seller for every buyer, but there's more demand to sell Bitcoin than there is to buy Bitcoin. I think that is because, again, Bitcoin's utility to the world is a smoke alarm for global liquidity, for macro environment. And right now, it is peak uneasiness. We are on the cusp. It is almost Christmas Eve for tariffs. Nobody knows what's going to happen. No one knows the geopolitical relationships. You've seen Howard Lutnick and Scott Bessent and Donald Trump running their mouths and talking a big game for months, for years almost. And now we get to truly see what all that talk was about. And people want to express their concern, their fear, their uneasiness, the uncertainty. And one of the best tools to do that is Bitcoin. It is over $1 trillion of global liquidity for you to express your macro view. And there's a lot of demand for people to express uncertainty and discomfort. That's why. I think it's that simple. What do you think about the Trumps investing in the mining Bitcoin company? No, doesn't matter. Wish them luck. How do you combat the FUD that the real creator of Bitcoin has malicious intentions? It doesn't matter what his or her, I think it's guaranteed to his now at this point. It doesn't matter what his intentions are. Who cares? What was the intentions of E equals MC squared? Does it matter? No. Who cares? So it doesn't matter. The code is open source. The creator, there's nothing the creator can do about it. Just don't know who cares what the intentions were. If someone were to say, Satoshi told me his intentions were to harm humanity, cool. Don't give a fuck. Doesn't matter, right? So I've never even seen FUD that would combat the creator having malicious intent. It just doesn't matter. And also, Bitcoin itself is a neutral commodity. What's the intent of corn? What's the intent of oil? What's the intent of aluminum? Who cares? What's the intent of E equals MC squared? Even if there was an intent, I don't give a shit. What is the best way to strengthen the Bitcoin network and ensure its future? Got to be more than just buy and hodl. I constantly obsess over how to make Bitcoin more useful to the world. So, first of all, buy and hodl is like immensely useful. You know, think of monies as the way in which humans store their time and their energy, right? Their effort, their work, their labor. For every dollar that's invested in Bitcoin, that is a vote to saying, I have contributed value to the world and to those around me, and I want to store that value, that time, that energy, that effort, that work, that labor in this money, not this money. So every dollar invested and held in Bitcoin makes Bitcoin immensely more valuable. Grows the network effect, the economies of scale, the liquidity, the saleability. So right now, $1.65 trillion worth of time and energy and effort and labor and work is stored and held in the Bitcoin network right now. That is like human value that's been created for society and is being persisted and saved in this money, which was zero 15 years ago. Crazy. So let's be clear, like buying and holding Bitcoin is immensely valuable. But what can make it even more valuable? I think being able to borrow against it is massive. I mean, that's how New York City was built. Is you bought valuable land, and you never sold the land because it was so scarce and so valuable. And you borrowed against the land to continue to invest and build businesses, homes, finance, all sorts of things. So I think being able to borrow against an asset that goes up 50% a year on average is massive amounts of utility. So that's one example. Lightning, being able to buy real goods and services with Bitcoin is another example. I think Bitcoin's utility will grow over time, and a business like Strike is in the business of making Bitcoin more useful to its customers. But I think buying and holding it is underratedly valuable. Like, I don't think people truly appreciate that is the use case of money. Like, that's what money is. Just doing valuable things for other people and taking that value and saving it somewhere so that you can exchange it for things you need later. Okay, lending. What will the interest rate be on Strike's lending product? If it's more than Robinhood's margin rate of 5.75%, why are Bitcoin-backed loans always higher despite being superior collateral? I'm not familiar with Robinhood's product, but Robinhood's product is based on securities. Bitcoin is a physical commodity. So I think the reason that Bitcoin rates have been higher is because there's a scarcity in dollars willing to fund these products. Like, who's giving you the dollars to borrow against your Bitcoin? Usually people that are smart enough to understand Bitcoin would just buy Bitcoin and not give dollars against it. So I'm not familiar with Robinhood's product, but as far as I'm concerned, Robinhood's product, it's like a margin security product. It's not like a spot commodity product. Will Strike support a BitKey integration? Yes, we will. I think we've talked to the BitKey team about it. I don't know the ETA or the timeline on that, but I know that it's happening, supposedly. So, and on our lending product, I had mentioned some news. We're officially giving out loans. So I would say it's in a slow, early rollout phase, more kind of like an external beta at this point. But people have DM'd me on Twitter. They've gotten access. I was looking at Slack, our internal Slack channels before I got it pulled up again, before I hit go live. And I'm like seeing the notifications come in. People are taking out loans. So I told you guys, like, first week of April, we'd start to roll this thing out. It looks like that's the case. Pretty exciting. And I have a lot of exciting leads on, I know capital and rates. I mean, these are all concerns. So I'm excited to talk more publicly about it when that time comes. But we have customers that are taking out loans on Strike. It's a beautiful product. It's really such a good product. You got buy and sell. You can DCA for free on-chain sends. You got an amazing wallet, an amazing brokerage service, and then now you can borrow against it. Pretty cool. The capital is accessible immediately. We have customers that borrow to buy the dip. If you want to do that, it's your risk. You can absolutely, and you have access to buy the dip immediately as soon as you get the loan. So all pretty cool and exciting stuff. So that's kind of my lending update. I know there's a lot of folks out there that want the product. It sounds like it's rolling out. I mean, it usually takes takes us about a month to roll out a product of this size to 100% of our customers. And this one might take longer. I mean, we'll have to see. The reason we are careful with it is because we want to do the best job we can. So I would say hopefully by the end of April, everyone that wants access has access, at least in the initial batch. Obviously, I told you guys, it's not global first. There's going to be certain limits on it. It's going to take us a second to get everyone the version of the product they want. But pretty big milestone for us. And we're really confident in our ability to make Bitcoin more useful by letting you borrow against it and not forcing people to sell it. So we're excited. We're really excited. Okay. That brings me to about an hour. I know some of the feedback is keep the episode short, keep them focused. So I guess I'll round it out unless there are any other questions. Listen, I am very bullish in the medium to long term. I'm starting to see the QE, not QE from the Fed. We're starting to see comments from Besant. It's very obvious why they're front loading a lot of the pain, why there's volatility. Very obvious. Mind you, these guys have been in office for 7, 8, 9 weeks, not a lot of time. Okay. Don't get scared out. Don't get worn out. Stay humble, stack sats, make more than you earn, touch grass, be productive, be happy, smile, do someone a favor, breathe. I think the dollar's going way lower against Bitcoin, way lower. I think Bitcoin's the best expression of currency debasement. It's the only truly scarce thing you can own in this world outside of your own time. I say my life and my Bitcoins are the only two things I can truly value because it's the only two things I can't make any more of, no matter how bad I want to. So with that, ladies and gentlemen, I'm out. Stay tough out there. Turn off the charts. Go outside. It's getting warm out. Sun's out. Spring. Flowers are changing colors. And I will talk to you all in the comment section and next week. Pretty exciting month coming up with strike lending and some other secrets. So I'm pumped. Much love.